Okay, so I am doing a video much earlier than I was anticipating because we have to talk about what's going on. Oh my gosh, it's so fascinating. It's ridiculous. And I mean, I haven't seen this kind of buzz around the markets and this type of activity in a very long time. Oh, I'm so excited to talk about this. So let's get into it, shall we? So, unless you've been living under a rock, you've probably heard of the stock GameStop or the company GameStop. It's publicly traded, and also, along with AMC and Nokia, those are all publicly traded companies. These are three stocks that have had massive amounts of attention as of late. GameStop, especially in the last 5 days. So, let's talk about why you're hearing about this and what's really going on. So I have to give you some side information in order for you to understand what's going on with these stocks. And this is going to be a very high overview. We're not getting into nitty-gritty details here. And it's going to be very simplified, but that's okay. That'll help you to understand. All right, so short selling. That is what is happening. Hedge funds have taken a short position against these stocks, and now it's being flipped on their head, and I'll get into that here in just a minute. So let's talk about what short selling is so you understand what's going on. So short selling is when you basically are borrowing stocks from a third-party firm, and you're going to sell it at a higher price, okay? And you are going to sell it at this price because you are expecting that stock price to drop for whatever reason. Okay. You might have, some sort of special analysis that shows that they should be valued lower. You might have insider information that says that, something's going to happen. It's going to push the stock price down, whatever it might be. You have some form of inclination as to, or inkling that it's going to drop. Okay, so you're going to borrow these shares from this third-party firm out of their inventory. So for example, let's say you take 100 shares of GameStop and you're selling it at the current price and you're expecting it to go down lower. Okay, and you selling those 100 shares is also going to help push the price down. So you sell it, and once, after a specified amount of time, you have a limited time frame in order to replenish these shares back to the third party, okay? And the third party doesn't care at what price it's being replenished at. All they care is that the shares are replenished inside their inventory. So you have X amount of time to replenish it. So let's say, you sell it at this higher price. Within your allotted time frame, the stock price falls and you buy it at this lower price. You buy back those 100 shares. Well, so then that disparity is your profit, okay? And then the third party gets a fee for letting you use their shares, and then you give back your 100 shares back to the third party, and everything is made whole, and it's all dandy and fine. So hopefully that makes sense. So that is short selling. So what's happened is that these hedge funds have taken a very deep short position against GameStop. So to give you an example, their stock price in a 52-week range was, the low for it was $2.57. I'm sorry, I can't even get through this without laughing because this is just so hilarious and entertaining. Anyways, all right, so their stock price has been pushed down. Now, retail investors, or what are called individual investors, as I refer to them. So individual investors / retail investors, there have been several that have understood that there was a short position taken against GameStop. And they have decided that they're going to flip these short sellers on their head, meaning that they're going to take the opposite position of the short sell. So when it got pushed down, they decided they're going to move in and buy up a whole bunch of shares. It's already been pushed down in stock price. They're going to buy it at a cheaper price. And when these short sellers have to cover their position, They're going to have to buy back the shares to replenish into the inventory of the third party. So they're hoping that when they do that, that stock price will pop up and they can make a profit. Okay, so everyone's trying to make a profit. They're just going about it in two different strategies. Now, what's great and kind of, really entertaining and funny is that the short position that the hedge funds have taken are in massive deficits. Okay, so what I mean by that is, okay, you sold it at this price, you're hoping for it to go down here. But when people start buying that stock, then the stock price starts going up. So now your profit isn't as big. Or if it comes up to the same level as you sold it, now you've made zero profit. Or worse, if the price level goes up compared to where you sold it, then now you're in big trouble. Now you've got a deficit. And these deficits right now are huge. So I told you the 52-week low for GameStop was $2.57. Today's high, $385. That is outrageous. Just on Friday, it was like $40 a share, and now it's at $385 was the high today. That is, again, I can't even get through this without laughing because it's so entertaining. So what's happening is the reason the price is going up so dramatically is that you've got all these retail investors flooding into the market, and they're going to take, again, the opposite position. And they're hoping that once the short sellers have to buy all their shares back to cover their position, that it's going to pop up that stock price even more. And part of that's already happening. You have short sellers that are panicking and they are buying back those stocks, and it's pushing that stock price up. What's also happening on top of all of this, I mean, there's just so many people, just so many fingers in the pie right now. So you also have other retail investors that are not even aware of any of this, but all they see is that GameStop is going on a meteoric rise, that the stock price is just skyrocketing. So they're dumping more money in to get in on the action. And then, of course, the hedge funds and the short sellers, they are freaking out even more because now the deficit isn't here. The deficit is like here, right? So they sold it here. Now the stock price is trading at a much higher rate and they are panicking. So they're buying up more shares, trying to cover their position so they can lessen the damage to their stock trade. And that is what, so you've got institutional, you've got the short sellers and institutional investors trying to buy up the stock, trying to cover their positions. You've got retail investors that know what they're doing and pushing the stock price up higher so that when when the rest of the short sellers come in to have to cover their position, it's going to push up their stock price. And then you have other retail investors that don't even know what's going on, but they're just buying the stock price to ride for the ride, all going in. That is what is happening basically in essence. And I mean, it is just entertaining. This is why they say this is a David versus Goliath type situation, because you have institutional investors and hedge funds and that have manipulated stock price. I mean, this is nothing new. This is a strategy that they have used many times and they make profits off of it. But now that somebody else has decided that somebody else meaning retail investors, individual investors, have decided to take the opposite position and they're the ones winning and making all the money. Now hedge funds and Wall Street want to cry foul. Oh, and I mean, they seriously are requesting for, of course, stops of the trade of the stocks. They are asking for bailouts because some of these hedge funds have taken such a deep short position that they've lost they've basically gambled away all their assets under management. And so now they're asking for bailouts, which absolutely not. They made these type of stock trades are incredibly speculative. I mean, really speculative. Unless you have, some very crazy insider information on the company, it is basically you are taking a big guess. I mean, you will have people argue that there's a lot of fundamentals on this, And what we're seeing right now, no, there is not. Okay, your fundamentals mean nothing. Your fundamental analysis means nothing right now. And so this is where, I mean, it's speculative. It is absolutely speculative. And for them to demand that the federal government use our taxpayer money to bail them out for them making bad decisions, absolutely not. This is not okay. We did bailouts in 2008. And I, of course, did not agree with any of that. They did it because they thought they needed to save the banking sector. But the hedge fund industry is not the banking sector. Okay. Hedge funds are basically mutual funds for the ultra rich. And there's very little regulations that govern them. And I mean, you have to have an immense amount of money to get into them. Like minimum, like most hedge funds are like $1 million to get in. And so, they made this mess. They can deal with it. They want to be bailed out because they made bad decisions on their bets. And the retail investors, they haven't done anything legal. None of their trades are illegal. But now hedge funds and Wall Street, they want to all cry foul because they're losing money and retail investors are making money. So Main Street is making money, but not Wall Street. And now they're trying to get the federal government involved, the SEC involved. They're trying to get Twitter and Facebook involved and Reddit. I mean, they're trying to shut down any form of communication for the retail investors to basically make moves against Wall Street and make money while they're doing it. And again, there's nothing illegal that the retail investors have done. But here they are, all crying foul. And, that's not okay. They made speculative trades, and had it gone their direction, they would be making billions and they'd be happy about it. But now that it hasn't gone their way, now they're, trying to, whine about it and make us pay for it with our tax dollars. Absolutely not. That's not okay. So this is why it has been such a crazy ride with GameStop, AMC, and Nokia the last couple of days. GameStop since last week. So I I think it's so entertaining, and it just goes to show you. I feel like Wall Street is quite pretentious, and they think they're smarter than everybody else. And what we're seeing right now is that retail side is showing that they are just as smart, if not smarter, than Wall Street. So maybe they should be hiring some of these people instead of trying to knock them down. Maybe they should be hiring them to their firms to help them make money, because hedge funds have been struggling for a long time. I mean, ever since like 2008, they've really had a hard time because there's not been a lot of arbitrage for them to get. And the flow of information it's instantaneous these days now. And so they no longer hold all the cards. They're not privy to more information than the retail investors. And some of these retail investors, I mean, there are some crazy, awesome, super smart people. And I love that this is all being flipped on Wall Street's head and hedge funds. It's very interesting to see all this. Anyway, so there you go. That's what's going on. Hopefully that gives you some clarification. As always, if you guys have any questions or comments, put them in the comment section below. Hit that subscribe button, and I will see you guys later.